Welcome to VibeSense. Today, we're diving into a huge proposed tax change that could totally reshape India's massive motorcycle market. Seriously, if you're even thinking about buying a new bike, the next few minutes could save you, or, cost you, a whole lot of money. So, is this proposal really going to turn the entire market on its head? Well, that's the big question we're here to unpack. This isn't just some small tweak. We're talking about a fundamental shift that could change prices, what bikes get made, and what people buy. All right, to make sense of it all, we're going to break it down into 5 key parts. First, what exactly is this new deal for bikes? Then we'll get into the nitty-gritty of the tax shift. After that, the really interesting part, who wins and who loses. Then, what has to happen for this to actually become law. And finally, what this all means for you. Okay, let's start with the big picture. India's finance ministry is looking at a major overhaul of the GST. That's the goods and services tax, specifically for two-wheelers. And just a quick refresher for everyone, right? GST is that one single tax you see on pretty much everything you buy. It was brought in to replace a whole confusing mess of older taxes and just, simplify things. So why now? Why this change? Well, the government seems to have 2 goals here. One, simplify the tax slabs, make them cleaner, but the second one is more strategic. They want to give a real boost to the mass market bikes, the everyday commuters, while at the same time taxing what they're now calling luxury goods a lot more. So let's get into the heart of it. How are the numbers actually changing? This is where you'll really see the impact. So check this out. The old system, what we have now, is on the left. Most bikes get hit with a 28% GST. The bigger bikes, 350cc and up, get an extra 3% cess, which pushes their total tax to around 31%. The new proposal, it's much, much simpler. It's a clean cut. A lower 18% for any bike under 350cc, and a massive 40% luxury tax for anything 350cc and above. And that number right there, 350cc, that is the new magic number. It's the bright, shining line in the sand. From now on, it could be what separates a standard motorcycle from a luxury one, at least as far as the taxman is concerned. And that one little number is going to drive all the price changes we're about to see. So what does this all mean for the motorcycles we actually see on the road? Who's going to come out on top and who's going to feel the squeeze? This chart really puts it all into perspective. Just look at that. A mind-boggling 97% of all two-wheelers sold in India are under 350cc. That means the bikes getting a tax cut make up pretty much the entire market. Only that tiny 3% sliver is going to fall into the new higher premium tax bracket. Okay, let's talk real money. Take the Royal Enfield Classic 350. At 349cc, it just squeaks in under that new line. Its tax would drop from 28% to 18%, and that could slash over 15,000 rupees off the price tag. But now look at the KTM 390 Duke, or the new Himalayan 450. They're both over 350cc. Their tax is going to jump from about 31% to a whopping 40%. We're talking about an extra 20,000 rupees tacked onto the price. That is a huge swing. So the winners here are pretty clear, right? It's the big mass market brands, it's budget-conscious buyers who are going to see lower prices and smaller EMIs, and it's definitely a win for companies like Royal Enfield, whose whole family of 350cc bikes is about to look even more appealing. And on the flip side, who gets hurt? Well, the premium brands, for sure. The folks who import big bikes. And maybe most importantly, all those aspirational buyers who were saving up to finally jump into that 400cc plus segment. Their dream bike just got a lot farther away. Now, it is so important to remember, this is all still a proposal. It's not law yet. So what's the road ahead look like? So this whole idea started making headlines in late August. The next big step is the GST Council meeting, where they'll formally debate it. Only after that meeting will we get a final decision and a date for when it might actually kick in. That's still a big question mark. And, it's not a simple rubber stamp. The GST Council is made up of reps from all of India's states. If some of them think this change is going to hurt their tax revenues, they might push back. That could lead to negotiations, delays, or even changes to the proposal itself. Okay, let's bring it all back home. With all this talk and uncertainty, what should you, as a potential buyer, actually do right now? Here's a quick guide. If you've got your heart set on a big bike, something over 350cc, you might want to keep an eye out for deals. Dealers might try to clear stock before a potential price hike. If you're flexible, now is a fantastic time to look at the sub 350cc bikes. They're about to become an even better deal. But honestly, if you're not in a huge rush, the smartest play is probably just to wait and see what the GST Council decides. And this quote from a market analysis really sums it all up. The whole point of this proposal is to shift demand. It's a deliberate move to make smaller, mass-market bikes more affordable and to position the bigger bikes as true luxury items. And that leaves us with one last really fascinating question to chew on. For years, upgrading meant buying a bigger bike, right? More CCs. If this passes, does the new aspiration become a super feature-packed, high-tech bike that just happens to be 349cc? Could this one tax code completely rewrite the definition of a dream machine for millions of Indian riders? It's something to think about. Thanks for watching VibeSense.